Hello, right there, and welcome to our first lecture under the Learning to Conquer the Forex Market course with yours faithfully, Trader Kenneth. In this first lecture, as promised, I said we are going to treat basic terminologies and concepts. Okay, so without wasting much time, let's get to it. So first things first, what is Forex? Okay, so this will answer the basic questions of what you have always asked about, about Forex. Okay, so Forex is just a short form for foreign exchange. So anytime you hear someone saying foreign exchange or Forex, they mean the same thing. So the Forex exchange market is one of the largest markets in the world, and this is why it has a total daily liquidity of $6.6 trillion. Now, what does that mean? Liquidity simply means the amount of money that flows in and out of a certain marketplace at a certain period of time. So daily, $6.6 trillion flows in and out of the Forex market. Where the money comes from, I don't know. Where it goes to, I don't know. With time, you get to understand how the whole mechanism works. Okay, but all you need to know for now is $6.6 trillion circulates around the Forex market on a daily basis. That is huge. So that should tell you how much money is within the Forex market. And with time, you understand how and why you need to know, facts like this. So the New York Stock Exchange, which is the second largest market, is having an average daily trading volume of $1.1 trillion. Now, what this simply means is, basically the same thing. The amount of money that is used to buy or sell a certain stock on the New York Stock Exchange, okay, on a daily basis, the average daily trading volume is $1.1 trillion. Now, the crypto market has a total market cap or had a total market cap of $2.3 trillion as of April 14, 2021, and it's still increasing. But as the crypto market too has its ups and downs. So at some point, it was $2.3 trillion, which was as of April 14, 2021. Okay, but right now it has reduced a bit, and with time, as time goes on, it's likely to increase as well. So what the total market cap simply means is just is a way they used to weigh the value of the crypto market. Okay, and it simply means that $2.3 trillion is within the crypto market. Like, what makes the crypto market valuable is because there's money, real money within it, and a total of $2.3 trillion is within or was within the crypto market as of April 14th, 2021. Now, that is to show the massive liquidity, which is also on the Forex market. So that is just how large the Forex market is. Now, what is traded on Forex? You've always been wondering, people talk about Forex, but what do people trade on this Forex market? So the simple or the basic things that are traded on the Forex market is what we call currency pairs. And currency pairs simply means one currency against another. So currency pairs are traded on the Forex market, and there are various categories of currency pairs. Those categories, you get to see them as time goes on. So other assets that can be traded via the Forex market are stock indices, commodities, and metals. Okay, so as time goes on, you get to know what those are too. Okay, so just keep all these terminologies in your mind, just hold them down. If you have a book and a pen, you can just be writing them down so that you don't forget. Now, who is a Forex broker? Now, Forex brokers are firms that give you access to the Forex markets. They provide you as a trader access to the financial markets by providing a trading account for you. They are like banks that keep your money. They give traders what we call leverage. Now, leverage, we get to learn that, so it's a topic on its own. Now, they also provide support functions to the traders who patronize them. There are various Forex brokers in the market. We have XM, Hot Forex, Forex Trade, KOT Forex, the RIG, which is strictly for access to synthetic indices market, and lots more. Now, to summarize everything we taught here, all you need to know is that to trade the Forex market, remember that the Forex market can be accessible via the internet, whereby you now use a certain application called MetaTrader 4 to access that Forex market. But you need to ask yourself, okay, this Forex market, won't I have an account which I will now fund with my real money to start trading? Well, yes, you are right. That's where Forex brokers come into play. Okay, so you just need to sign up with a certain Forex broker. Okay, so when the time comes to open a broker account, you just reach out to me, and I'll give you my recommended broker. Okay, so once I give you the recommended broker, you sign up to it and you understand more of what I'm talking about now. So what these forex brokers do is that when you just sign up with them, they will now help you link your accounts to the MetaTrader 4 platform. You will now have access to the forex market. Without them, you can't have access. Now, you would have signed up for an account. It's not that account you fund with your real money using any deposit method the broker provides for you, and your real money will be reflected in dollars. Let's say you fund $100, it reflects in dollars, which you now start using to trade the forex markets at large. So you now see that this $6.6 trillion market, which seems so big, you now have it at the palm of your hands, and you'll be able to trade based on what you learned. Okay, so you'll be able to trade with your real money. You can even trade with fake money. They call it a demo account. So you use a demo account to first practice, which will still be provided by that broker when you now go over to use your real money to trade. Okay, so that's it on forex brokers. As you're opening the forex broker account, you understand more as time goes on. Okay, so trading times and trading session. Now, this part might, over the years, when I teach people, it usually gives them some kind of confusions. Okay, so I just hope you get to understand it. Okay, I'm going to break it down for you. I'm going to try my best to break it down to the last bits and arrange it all the way up back so that you can assimilate and understand it properly. So there are 5 trading sessions on the forex market. They include the Sydney session, the Tokyo session, the London session, the Frankfurt session, and finally the New York session. Now, these session names are derived from the major cities in which most of the transactions are done. Now, for example, Sydney session is representing Australia and other countries around that time zone. Now, Tokyo session, sometimes called Asian session, represents Japan and some of the Asian countries. The London session represents the United Kingdom and the countries within it. Frankfurt session represents Europe. Frankfurt is in Germany. Now, finally, we have New York session, which represents America. Now, Forex is actually a 24 hours market. It is most times regarded as a market that never sleeps because it's open for 24 hours of the day, except on weekends. So it's open 24 hours, 5 days of the week, Monday to Friday. It's not open Saturday and Sunday. And you will know why as time goes on. So no matter where you are around the world, no matter your time zone, you can actually trade this large, highly liquid market. So, whatever country you're in, you can trade the forex market. If you open your broker account in, let's say, Germany, you can still go over to somewhere like London to trade, and nothing happened, no change at all, no kind of confusion whatsoever. So now getting to their trading times, each of these sessions have their opening and closing times. Now, Sydney session opens by 9 p.m. GMT. Now, remember that GMT is the Greenwich Meridian time, okay? And you need to know the country which you're from. You need to know the time zone of your country before you're able to get this calculation right. So I'm a Nigerian and I stay and I live in Nigeria. So and I know that Nigerian time is GMT plus 1. So Sydney session opens by 9 p.m. GMT. So that means it opens by 10 p.m. Nigerian time for me because Nigerian time is GMT plus 1. Now Tokyo session opens by 11 p.m. GMT. That means it opens 12 p.m. my time. London session opens 7 a.m. GMT. Frankfurt session opened by 8 a.m. GMT. New York session opened by 1 p.m. GMT. Now note that these times are listed in GMT, so you should do the appropriate calculation depending on your country's time zone, just like what I said, so as to know which session you are currently on. Now all sessions last for 9 hours. So having known their opening times, to get their appropriate closing times, just add 9 hours to the opening time to get when they close. Now, for example, Sydney session opens by 9 p.m. GMT, closes by 6 a.m. GMT. Tokyo session opens by 11 p.m. GMT, closes by 8 a.m. GMT. New York session opens by 1 p.m. GMT, closes by 10 p.m. GMT, and so on. Just add 9 hours to their opening times. Now, you might be wondering, why is it 9 hours? Now, remember that you let's say banks open by 8 a.m. so 9 a.m. let's just say 8 a.m. So when they open, they stay 9, 10, 11, 12, 1 p.m. They stay 2 p.m., 3 p.m., 4 p.m. Now you notice that once it's 4 p.m. they tell you that they're closing. In fact, they just close the door. Let's say you're entering around 3:55, they close the door behind you. Then they only deal with those people that are with them in the bank, and then they just allow the rest to go. When you're leaving, they open the door for you, but they won't allow anyone in. Now, some banks do 8 to 4, some do 9 to 5. Regardless, it is 9 hours. Now, these banks that do these kind of things, it's not just in your country that it happens, it happens worldwide. Every single bank opens 8 a.m. or 9 a.m., closes 4 or 5. Let's just call it 8 to 4. Okay, let's just call it 8 to 4. Or let's call it 8 to 5. Okay. So every bank opens 8, closes 5. Okay. So don't think your country is the only country that does that. Now, what happens during this time that the banks open is that they start trading. Okay, most of these banks trade forex. Big banks they start trading. Now, when they are trading, their money, that $6.6 trillion that flows around the market. When we get to fundamental analysis, we will get to understand how price moves. But just know that their money is what makes the market move faster, and it makes the market have more liquidity because their money is large. Banks have a lot of money. So when that quick movement is happening during their opening, closing session, just within their working times, okay, this is what we now call the sessions. So every single country does that. Okay, so Sydney session, it is 9 p.m. GMT, okay, in their own time. And after 9 hours, by 6 a.m. GMT, it closes. Now, in their own time, it will be 8 a.m. to 5 p.m., just like what we said. But in GMT time, it is 9 p.m. to 6 a.m. Now, Nigeria, I stay in Nigeria, so we share the same time with London. Okay, sometimes London is 1 hour behind, sometimes it's the same time in Nigeria. Okay, so let's just assume that London session is the same as Nigeria session based on this example that is here. So London session opened by 7 a.m. GMT, okay, and that means 7 plus 9 hours, that should be around 3 p.m. GMT, okay. So 7 a.m. GMT is 8 a.m. Nigerian time, okay. So that means 8 a.m. is the same time that London opens to. Because like I said, London shares the same time with Nigeria. So 8 a.m. GMT, London session has opened. So 8 a.m. Nigerian time, I already know myself too that London session has opened because Nigeria and London share the same time difference. So now after that 8 a.m., just count 9 hours. So 8, 9, 10, 11, 12, 1, 2, 3, 4. So that means 4 p.m. Nigerian time, banks have closed, just like what I said, 8 to 4. Okay, them too, the same thing with them. Their session to closes around 4. So, this is just how it works. There's a certain app that you need to download if you want to understand this session better and you want to know what's when sessions open and close, because some sessions blend into another. When one session is open, another one too can join it to open, and then the market is now very quick and all that. Okay, so the name of their app is Forex Stars. It's available on Android. I don't know for Apple. Okay, so note, it is always good to trade the forex market when two or more sessions are open at the same time. And this is why. This is because volatility is always more when two or more sessions are open. Now, on the forex market, more volatility means more rapid movement involved. Big moves in a couple of seconds or minutes. Now, as a forex trader, you wouldn't want to trade the quiet market because there won't be much fluctuations, and it's those movements that make money for us. So just like what I was saying, when the sessions open, banks are now in session. Okay, so they start trading. Now, because they are trading, their money is making the forex market at large to be faster, to move quicker and faster. But the moment they close, you can do it yourself when you open a demo account. The moment some sessions close, those currencies that are related to those countries, the pairs, I told you we trade currency pairs on the forex market, the pairs will just get slower, like their price movement will just get slower. But when they are open, when the sessions are open, the pairs move faster at a faster pace, and it's that fast movement that make money for a lot of traders. Okay, so when you that are trying to trade, slow movements are usually discouraging. So to just make it be like this price should just move and things like that. But when it's fast, quick, at least you know your fate. Even though you want to lose money, at least you lost it quickly. If you want to make money, you make it quickly and things like that. So that's why it's advisable to always trade the market when some more sessions are open. Now, in Nigeria here, during the daytime, from around, let's say, 8, 9, 10, all the way to 5. The market is usually fast. So in a way, I even feel that Nigerian timing is lucky because it's just like our daytime it's usually good. And in the night time, it's most sessions will just be closed because of our timing. Most sessions around the world will just be closed, and the market will now get slower. But in a country like America, you see traders even having to stay awake at night just to trade because their timing doesn't even correlate a bit to every other session. So just like they just have to, if they need the fastest market or if they need the fastest price movements, they need to just stay awake at night. Okay, so we are lucky in Nigeria here, and during the daytime, our price moves faster for us. Now, for example, by 12 a.m. GMT, Sydney session and Tokyo session will be open together, and the currency pair involving both sessions, that currency pair is called AEDJPY, will have more volatility. You can just try it out yourself, do a kind of test run. Now, another example is by 8 a.m. GMT. London session and Frankfurt session will be open at the same time. In fact, even Tokyo will be with them briefly. So you notice that volatility for some pairs will increase during such times. As a forex trader, waste time in trading to fall in periods where two or more sessions are open at the same time. Now, that's it on trading sessions and trading times. So, like I said, if you need to understand how these sessions open and close, within all these time periods I've mentioned, you can just download the Forex Hours application. It's available for Android, but I don't know for Apple. So when you download it, you see how the app will tell you when this session is open and when the session is closed. It also tell you the currency pairs that are involved in this session. So that means when the session is open, these currency pairs will move faster. But once they close, the currency pairs will just get slow with their price movements and things like that. Now, moving on to the next, terminologies used in Forex. Now, in every field you try to learn, you have to get accustomed to its terminologies. So is the field of Forex. So you need to learn the terminologies that are used in Forex. Now, when someone says he wants to go long, it simply means he wants to buy. So to go long means to buy, to go short means to sell. Now, if a trader tells you that he went long on a currency pair, it meant that he bought the pair. While if they tell you that they short the currency pair, it means that they sold the pair. So soon you get to see that all what we are doing in Forex is just buying and selling. Now, the next times we see are bullish markets, a market that is going upwards, bearish market, a market that is going downwards. Now, when someone tells you that a currency pair or a commodity is bullish, it's telling you that it's going up, while one that is bearish is going down. Now, the buyers are referred to as bulls and the sellers are referred to as bears. Now, the reason why this is so is because if you check the characteristics of a bull, that is that animal, one that has horns, the bulls, bulls strike upward anytime they want to fight. They bend their head downward, okay, and when they are coming to their target, they just raise up their head. So they strike upward. And bears, when they want to attack, they start from up, they stand up, okay, with their paws and with their fangs or paws, whatever. And when they want to strike, when they reach their target, they just slam down. So that is why buyers are called bulls and sellers are called bears. And anytime the market is going upward, they say, okay, yeah, this market is bullish. And anytime the market is going downwards, they say, this market is bearish. So ranging, a market that is said to be ranging is a market that is not moving upward or downward. It doesn't have any particular direction. Just like the word ranging means something is just ranging. It's just moving sideways. Now, when they say market is trending, it means that it has a direction. So it's either moving upward or downwards, it's either trending bullish or bearish, like we talked about before. So you can hear people say the market is trending upwards and the market is trending downwards. Now, you may also hear people tell you that the market is just ranging. So they are indirectly telling you that the market has not found any direction yet. Now, hawkish, this term is mostly used when referring to the central bank governor or a personnel of a country. Now, when they are hawkish, they tend to be liberal on interest rates and are willing to increase it. This is good news for investors. So when they say the central bank governor is a hawk or is hawkish, simply means that they are increasing interest rates in that particular country. So just like the US, right now interest rates are being increased. So the personnel are hawkish. Now, when it comes to dovish, dovish is simply the opposite of hawkish. Now, financial personnel who are dovish are very restrictive. They do not want to tamper with the interest rates, and they even want to reduce it. This is bad news for investors. Investors in that currency, let's say you want to save money in the bank, if interest rates are not good enough for you, you wouldn't want to invest in that currency at all. So dovish personnel are those that want to increase the interest rates, and it is bad news for investors. So as time goes on, you get to understand that the forex market depends on news releases a lot. News releases, financial reports from countries and things like that. So when trading forex, you can't neglect those things. So that's where fundamental analysis comes into play, and you get to learn those important news releases to look out for and how to interpret them. Now, NFP is another terminology, and it's an acronym for non-farm payroll. It's a very important news event in the US that comes up every first Friday of every month. And as we proceed in this course, we get to know more about it. Now, also, most of the currencies have specific names in which they are called. For example, the dollar is sometimes called greenback, pounds sometimes called cable, the New Zealand dollars is called the Kiwi, Australian dollar is called the Aussie, Canadian dollar is called the Loni, oil is referred to as the black gold, and so on. So now we'll get to know more of them as we go along with trading. It's just to get you acquainted with the most popular ones so that when you see fellow forex traders discussing, you tag along easily. So in the next lecture, we are going to be treating non-farm payroll, right? So this lecture is over. If you have any questions, do well to reach out to me and I'll give you the answers that you seek as always. Also, if you feel there's some things you might forget, just like I said, take out the book, take out the pen, write them down, and when you get to come in contact with me, I'll give you the answers that you seek as soon as I am available. So if you're ready to kick off the next lecture, just hit the next button and I'll see you soon.